Good afternoon. Welcome to Midcap Radar. We are live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Vivek Iyer. We are down 125 points as we speak, broken that 25,800 mark. There was some recovery at around 12 p.m., but that has been sold into. And some interesting moves in the mid-caps as well, down 0.4% as we speak.
That's right. Good afternoon, Sonal. The good part is it's the last day of,
yes.
of the week. Very truncated week, so that was the good part. But like you mentioned, a lot of selling pressure yesterday. From the day's high, we've lost quite a lot.
Yes. Almost a 350-point cut from the highs.
Yesterday morning, we were hoping that we may hit lifetime high levels, but that at this point of time, those hopes are quite far away. But we have a lot lined up on the show and some important earnings to discuss as well. So let's start off with the top headlines. Stocks drift down with the market seeing a negative tilt. FMCG, financials and healthcare are the big drags, while metals and realty gain. Mid-caps flat.
The Defence Acquisition Committee clears proposals worth 79,000 crore rupees of the Army, Navy and Air Force, spelling big business for Indian vendors like Bharat Dynamics, BEL, Cochin Shipyard, Garden Reach Shipbuilders and Mazagon Dock.
Laurus Labs in focus after the company in its con call says they expect gross margin to remain around the 60% mark versus the earlier guided range of 50 to 55%. Jefferies issues an underperform call but raises its target to 700 rupees a share. Goldman Sachs issues a sell call while DAM Capital issues a buy call as they expect further strength.
EPAC Prefab gains for the second straight day after reporting good Q2 numbers. The stock has surged over 10% today after seeing a surge of around 15% yesterday as well.
Midwest lists at a 10% premium versus its issue price at 1,065 rupees a share. The management tells CNBC-TV18 that the largest tailwinds are expected from new businesses like quartz and the solar gas industry.
Okay, a lot of stocks on our radar. Today we'll discuss them in greater detail. For now, the mid-caps are down 0.5%. The small-cap index should also come up for you on the screen. That one is down to 0.2% as we speak. There's been a sharp fall in the mid-cap index. It is at the day's low, and that is the similar story with the small-cap names as well. For the Nifty, of course, that 130-point cut is what we are talking about. And banks, those are the biggest losers today. 0.9% gone there. Across the board, the markets are at the day's low, and we do have a lot of names which are leading to this fall as well. Some pressure coming in on these financial names in the Nifty pack, and also some of these IT names which are pushing the Nifty lower. And despite those big deals happening in the financial space, we continue to see that fall that come by. But yes, mid-caps are in focus.
Well, that's right. And this is our special segment, Mid-Cap Movers. Hormaz is standing by the wall to take us through the list of mid-caps that are making all the moves as far as the broader end of the markets are concerned. Hormaz, over to you.
Well, you're looking to going into the weekend with some profits and only par for the course considering the moves that you have seen. But there have been pockets that have done well today. And defense, not as much as you would have anticipated, but some defense ancillary is doing well. Paras defense at one point was up around 8% at around noon, but that recovery has been sold into, so still around 4% higher. Shipping Corporation of India, though, continues to move from strength to strength at the highest point of the day, 8% higher on that stock. And Idea Forge now gaining with around 3% of an up move in today's session. But the metal stocks have been shining all through the morning. They continue to shine today as well. You look at Nalco, Hindustan Copper, Vedanta crossed the mark of 500 in intraday trading for the first time in 2025. And Gravita India too, seeing gains of close to 6%. Now, earnings reactions, not as many, but look at PTC India Financial, that's up 15%. It's still holding on to those gains. Sagar Cement at the lowest point of the day, 6% lower there. And Colgate with brokerages not too enthused by the quarterly performance, still 3% lower on that stock. Now, stocks that have done well on the volumes front, and those names include likes of Credit Access, Grameen, Samman Capital, likely to enter the F&O ban again today, and SBFC Finance, mostly financial and NBFC names, gains of anywhere between 3 to 8% on very strong volumes. And lastly, on the downside, with the broader market names like Dr. Agarwal, Ather Energy is witnessing some profit booking after a very strong week that it has had. Aegis Vopak is at the lows of the day, as is Indofarm Equipment extending its losses, now down 6%. Back to you guys.
Oh, yes, a big fall that we are seeing from the highs of the day. And that is something that we'll discuss now with our technical guest. Thank you, Hormus, for joining us, though, with all those details. So let's go across to the technical guest who is joining us now on the show, Religare Broking's Ajit Mishra. Ajit, good afternoon. Thank you so much for joining in. Do you think we'll break the lows of the day today as well? We've already off quite a bit from yesterday's high. What are the charts suggesting?
Yeah, good afternoon, Sonal. Yes, we are seeing that the profit taking, which started yesterday after the phenomenal gap up start, we are seeing this decline continuing across the board. The large caps, basically, where we saw strong traction, specifically in the private banking majors, are witnessing decline across the board. So I believe that it's so far a normal correction because the way the market have advanced in the recent weeks means it was the fourth successive week where we were trading in green, and the banking index have recently made a new record high, roughly around 8% kind of a gains, something that the banking index have experienced in this recent surge. So it's a normal profit taking, and I believe that 25,650 is the area basically where we have the immediate support, which was earlier acting as a resistance. The record highs, previous record high zone. So as long as we are holding above that mark, we should continue with the buy on dips approach when it comes to the heavyweight, especially from the sectors which are showing resilience or seeing relatively less decline during this fall.
Got that, Ajit. And Ajit, any individual trading buys or sells for our viewers today?
Yeah, certainly. So Chola Finance from the financial basket, wherein we are seeing resilience. The stock is trading at the record highs. It's a fresh consolidation range breakout. So we believe that 1770 is something that the stock might test in the near future. So with stop at 1680, one can go long in Chola Finance. Bharat Forge also is something that one can consider to go long in. After almost 1.5 years of consolidation, we are seeing fresh traction. Yesterday, it was a fresh breakout. So 1410 is what we are eyeing as an immediate target.
All right, take that point. Bharat Forge is seeing that sharp slide from the highs of the day, down 1.5%. Take that point, Ajit. Thank you so much for joining us today and taking us through your chart checks and individual names as well. Well, in a falling market like this, there are a couple of stocks which are bucking the trend. PTC India Financials, that stock is up 15% as we speak. There's Utkarsh SFB, which is up 12.5% in trade right now. We spoke about EPAC prefab in our headlines as well. That stock continues to surge, up 11.5%. Canada HSBC Life Insurance, which is a new listing, that stock is also up 9%. We have Sammaan Capital, which continues its up move, up 7.5%. Gen Resources Recycling, that stock also in focus, reported numbers yesterday, was a good listing. That continues its uptick today in trade as well. But as we slip into a break now, here's some good news for our viewers. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.
Welcome back to Midcap Radar. Well, one particular stock that listed today is Midwest. This particular company managed to list at a marginal premium to its issue price and continues to trade 6.5% higher. Mangalam joins in on this particular listing. And Mangalam, you also spoke to the management earlier today, right?
That's correct. So, just to give you perspective on what the company basically does, Midwest is, a mining company which has a lot of business coming in from granite and now increasingly quartzite and HMS as well. Importantly, nearly 70% of its business comes in from dimensional granite, which is a premium granite. And importantly, they're also increasing their capacity of quartz once they get the funds from the IPO. That was the object of the issue itself. So currently, basis their capacity, they can do about 250 crores of revenue from quartz, which accounts for sub 30% of their overall sales. Their capacity on this will double, and the granite business will continue to compound at around 11%, which the company has been reporting over the last few years as well. So if you just look at their financials, last year they did revenues of closer to 650 crores with almost 27% margins, a margin jump that we've seen between FY23 and 24. And at the same time, the company believes that this run rate in terms of margin improvement can continue. In fact, the current quarterly run rate of 150 crores, the management, when they joined us, said that they aspire to take it to 250 to 300 crores, taking the total revenue to close to around 1,200 crores, an improvement in margins to around 35-36% by the end of the next 3 to 4 years. So FY30, if you look at the company, you would have about 1,200 crores of revenue along with 35% margins, which takes the EBITDA to close to 420 crores, which makes the company valued at current prices at around 10 times EV to EBITDA on a 4-year forward basis. So that's something we will have to monitor going forward. Remember, currently 30% of their business comes from non-granite, which they believe can jump to around 50% plus. And more than that, international businesses or international peers of this business do margins of over 40%. So that's something that the company can enjoy as well. So taking their blended margins to around 35-36% from 27% that the management had guided for earlier, and that would be their aspiration. So all these factors, something that the street likes. Let's see what they deliver from here on. That's what will drive the share price forward, because at 10 times 4-year forward for a mining company, the valuations do not leave much room for upside. But if they were to show higher revenue growth and improvement in margins, probably the street would like that. In fact, I heard, let's hear out from what the management had to say to us earlier on the channel.
In terms of the largest tailwinds are going to come from our new businesses, which is quartz for engineered stone, as well as solar glass industry, which we have commenced production last quarter. And that is in the short term. And in the medium term, the growth drivers would be the heavy mineral sands project, out of which we will supply the feedstock to the titanium downstream industries, as well as the byproduct monazite, which will cater to the rare earth industry. Our margins of current business are sustainable because of the cost measures and the positioning of the business that we are in. We are sitting on a resource which is rare and supplies to a global feedstock in terms of the granite. And if you look at the margin profiles of similar companies, though they are not in India, outside India, for example, Iluka, which will be a reference in Australian exchange for heavy mineral sands business, their margins are upwards of, it's listed on ASX, upwards of 40s. And in rare earths, you can always refer to companies like Linus Rare Earths, which is also listed overseas, and you can look at those numbers.
All right, that's the management of Midwest. That's a new listing on the bourses. But let's talk about Laurus Labs. The conference call highlights that came by, the brokerage calls as well. The company reported numbers yesterday during market hours, but we got all these updates later. Ekta is joining us now with all the details. Ekta.
Well, for Laurus Labs, I'll just concentrate on a couple of conference call takeaways. They've guided for around 2,000 crores in terms of CDMO sales in FY26. They are on track to achieve this guidance because the first half sales stood at around 970 odd crores. The management expects CDMO sales to be driven by animal health in the next few years. They've attributed the high antiretroviral sales this quarter due to timing and slightly higher demand, but they do not view ARV to clock material growth in coming years. The gross margins are expected to remain around 60% versus the earlier range of 50 to 55%. They're expecting an improved asset turnover. The margins are likely to improve further as the company shifts towards small and large molecule CDMOs. The company has announced $600 million in terms of capex over the next 8 years for their new Vizag site, and they plan to invest in modalities such as anti-drug conjugates. The company also, in fact, will be working on an anti-drug conjugate asset and will be filing an IND application soon. The likes of Jefferies has an underperformed call, and the target price, however, has been raised to 700 rupees. According to them, Q2 has beaten estimates. Goldman Sachs has a sell call, target price 775. It was a strong Q2 according to them, beating estimates as well. And DAM Capital has a buy call and a target price of 1,083. They expect further margin expansion soon.
Thank you so much, Ekta, for joining us and taking us through all of the internals as far as the results of Laurus Labs, as well as the key takeaways from the conference call that ensued last evening. Well, we'll now slip into a short break. We'll get him on the markets and stock-specific action on the other side. Stay tuned.
All right, 160-point downtick on the Nifty as we speak, very close to that 25,700 mark. We continue to get to lower lows for the day. The mid-caps are down 0.4%, and this pressure in the last couple of minutes has come in from a lot of other sectors. Grasim, for instance, is at the day's low. We have SBI, so financials, they continue to be a pressure point for the markets. We have HDFC Bank as well, which is at the day's low. Axis Bank is the other stock that should be on your radar. So a lot of pressure coming in from the financials. The Bank Nifty is down 1% as we speak. So watch out for important levels on the Nifty as we go through the trading day. But what is doing well in today's trading session is defense companies buzzing in trade after a nod for capital acquisition proposals worth 79,000 crore rupees for the Indian Army, Navy and Air Force. Upasna is here with more details on this one. Upasna?
Well, DAC clears procurement proposals worth 79,000 crores, taking the year-to-date total for this financial year to as high as 2.5 lakh crores. Now, let us look at what are the key beneficiaries according to Elara Securities on the back of this. Indian Army, NAG missile systems, Bharat Dynamics will be in focus on the back of this, and the order estimate here by the brokerage is 2,000 crores. Next up is ground-based mobile system. BEL is the key beneficiary here. Coming to Indian Navy, landing platform docks, various shipbuilders such as Cochin Shipyard, MDL, GRSE will be in focus on the back of this, and the order size estimate here is as high as 60,000 crores. Now next, moving up to naval surface gun, BHEL and GRSE are the key beneficiaries here. Advanced lightweight torpedoes, Bharat Dynamics with an order size estimate of nearly 500 to 1,000 crores. And lastly, coming to electro-optical infrared search and even track systems. On this counter, BEL will be the key beneficiary. So all in all, we'll be watching out for all these counters on the back of these key beneficiaries.
Okay, Upasna, thank you so much for joining in with all those details. By the way, as we've been pointing out, there's a further slip in the markets. We are at that 25,737 mark. Important to see whether we go below this important crucial support as well, 25,700 that is. Now, do remember the majority of this pressure is coming in from banking names because that index is down 1%. The mid-caps too are under pressure, 0.5% gone there, and the small cap index is the other one, which is seeing a lot of pressure. So the broader end of the market's not doing so well. Nifty Metal Index, that was up more than 1%, has come off from the highs of the day. It was supporting the Nifty, but now that's also, of course, has seen some pressure from the highs. In terms of movers in the broader markets, we do have Urban Company, which has been under pressure actually after that bumper listing. That's down another 4.5%. Ather Energy is down 4%. HUL, that's an important stock to track. It was under pressure since the numbers that were reported yesterday. Another 4% gone there. We have Colgate as well on the back of numbers, down 3%. Cipla, despite that positive news that came by, the stock is down 3.5%. So it's very large cap led, and a lot of it coming in from financials.
That's right. You spoke about Cipla, the pharma space. Look at the healthcare names. Names like Fortis are down for the second straight session running, almost 6% lower. Max Healthcare, that particular stock near the day's lowest point. Kotak Mahindra Bank, you have to look at that particular name. One of the top drags ahead of earnings. That particular stock, one of the key drags. Also have a look at HDFC Bank as well as HDFC AMC. Both of these stocks under quite a bit of pressure. And auto ancillary names like Bharat Forge, some commentary regarding the trade deal is something that's weighing in on these particular names as well. But with that, it's all the time we have on this edition of Midcap Radar. Your stocks when we return.